Good morning, SMF, MMTs. Time is 5:45 a.m. Pacific Time. Pre-market futures on the NYSE. Here is that gap up list. BHP Hilton's in there, okay? And basically the markets have had a fairly decent correction and a really good haircut. It's broken down to some levels. On NYSE stocks that we cover, there's a Tiffany gap, TIFF. Some are going to have news related. There are some names like TLB down 27%, PBY down 11.1%, GII down 11.1%, FCEL is also down 8.4%, and FGP on light volume down 3%. Now, one of the things that we're going to take a look at here, once again, short-term market volatility to the upside versus the downside is a key factor. Stocks hit support levels, they bounce up. If they hold higher in the brain and consolidate, then want to move higher, we would see an upside day. There would be some short covering, but the indexes remain in a correction mode. And pre-market volatility so far every morning is when they make that intraday high and they start to reverse. It's a very simple, relaxed, hit the sell short button. And then the application turns in the IR and the bid and ask ratio starts working your way. You learn to let them run. The thing about it is that the markets itself have broken below the key levels. We were long overdue for a correction. So you're going to have upside volatility. However, let us not forget that the upside volatility on the opening bell has been consistently getting that short in at that high. Then we'll see how they pull back and how they want to set up. In the short-term volatility band, price action volatility band within the trade management. The NYSE gap open down list, on the other hand, is you have Cleveland Cliffs, you have CLF, you have PBY, you have TLB. Very diminishing gap down list, and that's how price action volatility is, where we have an expanded gap open list on the NYSE. However, MMTs, as every morning since we've been in the correction, it is proven for 5 weeks in a row in pre-market gap ups, when they put in that intraday high, then they reverse. Now, the futures are gapping up, S&P at 6.5. There was a point that the Dow was up 66 handles, at 46 handles right now. Nasdaq comp futures up 7.8. Now, we've had a good correction. So once again, as we look to see how this market will set up at the bottoms within the price volatility, is the key is when they do hit that support level, they're off to the races, but they're pullbacks. When they pull back from those highs, that the pullback is 3 teenies in the brain, but the pullback is diminishing. Everything would stay elevated in the application, our trading application, would show the elevation of the pullback, which would equal strength in the names. So once again, buying off that bottom and this volatility and market corrections, you can see the NYSE. The trade management will remain the same until the bottom side of the market is going to really show its colors and how this particular correction that we called for sets up at the bottom. Stocks, individual stocks, have worked off their overbought levels for the last 5 weeks. So the market certainly isn't like it was 5 weeks ago. And as the sellers clear out of the market, we'll set up that next bull rally. When we set up that next bull rally, there will be some things to look at, and we will be talking about that live in the trading room. Gap up, intraday high, sell short, pull back, consolidate, intraday long. Trade management both ways, establishing strength and weakness within the price action on the NYSE gap open.